Hi everyone and welcome to LSBF TV. Today we are going to be working through Level 4 Financial Statements of Limited Companies. My name is Ridwana Uddin and I am one of the tutors here at LSBF, and we're going to be giving you the confidence that you need to be successful in your Level 4 FSLC exam. The last time we saw each other, we were going to go through the cash flow statement, and we attempted the cash flows from operating activities. And today we're going to be continuing with that task, building the cash flow statement. Everyone should know the preparation of the cash flow statement relates to the operating activities, the investing activities, and the financing activities. We already started doing the operating activities last session, so we're going to be continuing the building of this cash flow statement using the scenario from this assessment. Let's take a look. You've been asked to prepare the statement of cash flows and the statement of changes in equity for Chicago for the year ended December 11. The statement of changes in equity will be discussed in another session, not today. We've got the most recent statement of profit or loss and the statement of financial position with comparatives for the previous year. So we've got the statement of profit or loss there, and we've got further information. Total depreciation charge is 4992. Property, plant and equipment with a carrying amount of 543 was sold in the year. Land was revalued upwards during the year by 7 million. All sales and purchases were on credit, other expenses were paid for in cash, and a dividend of 4,000 was paid during the year. Such information is going to be dealing with the transactions relating to the cash flow statement. Reading on, we've got the statements of financial position for the current year and the previous year, and part B of the question is for 19 marks. We attempted part A in the previous session. Draft the statement of cash flows for Chicago for the year ended 31st of December 11. And this is for 19 marks. Can you believe it? Now, we have already done the cash flows from operating activities, and I have filled in the answer from the previous session. We're going to continue with these, starting off with the investing activities. From your previous studies, you should know that investing activities relate to the purchase of property, plant and equipment, or selling property, plant and equipment. And it also can include any cash received from investing activities, any interest income or dividend income. Now, the examiner will provide you with a drop-down list, and you need to select the items relative to the investing activities. The first three, inventories, payables and receivables, we should not allow ourselves to be confused with them because they were relating to the operating activities. Bank loans, dividends paid, they relate to financing activities. Proceeds of share issue, these relate to financing activities. It is proceeds of disposal of PPE and purchase of PPE that relates to investing activities. A final bit here we've got is revaluation. A lot of students should understand that revaluation of assets relate to non-cash items. If you wish to revalue your asset, matching it to the market value, did you receive extra cash in your pocket? No, you did not. So revaluation will have to be ignored because they do not relate to cash received. We're going to be concentrating on the proceeds on disposal of PPE. Okay, so the first thing I'm going to do is proceeds on disposal of PPE. Now, the examiner did mention in the notes that an asset with a carrying value of an amount was disposed of. If I scroll up, I can reread it here. Property, plant and equipment of 543,000 was sold in the year. Now, if you look at the statement of profit or loss, you can identify if this was sold at a profit or sold at a loss. We can clearly see that the PPE disposal gained a profit of $139,000. So if we know that it was sold at a profit, we can calculate the sales proceeds. On the next page, we have the workings that we should fill in. The examiner's report stated that these workings should be filled in to the best of the student's ability. If they get a calculation wrong, then they can still be awarded with partial marks, even if the calculation or the final answer is incorrect. So try to use these workings as carefully as possible, giving you the identity for calculating the proceeds on disposal of PPE. The first thing that you could start off with is the net book value of the disposed amount. So carrying amount of PPE sold. And we identified this to be $543,000. Now, this asset was sold at a profit of $139,000. So we've got profit on disposal of PPE. To find the profit on disposal, we've just looked at the statement of profit or loss, and that's $139,000. If you make a profit on disposal, it means you've sold it for more than what the asset is worth. So this $139,000 is going to be added to the carrying value. So 543 plus 139, that gives us 682,000. 682,000. This was the total proceeds. So if I place that in my cash flow statement here, proceeds on disposal of PPE, that's going to be a positive 682,000. Now you don't have to include a positive sign here. This is just for me to remind you that this was a cash inflow. So be sure to put this as a positive number. The next item under investing activities will be the purchase of PPE. How much money did this company spend buying new non-current assets during the period? Purchase of PPE. For you to know this, you would need to apply another working. The examiner's report says that a lot of weak students did not calculate this properly and did not use the working box on the previous page. The purchase of PPE allows us to identify the balances of PPE at the start of the period and compare it to the balances of PPE at the end of the period. But the information relating to PPE will either increase the value or decrease the value. Okay? So we start off with property, plant and equipment at the start of the year. And at the start of the year, we've been given the information from the statement of financial position. So if I go to the SFP, here we go. We have PPE at the start of the year of 31962. And the PPE at the end of the year is 77736. You need to ensure that you are calculating this very, very carefully. So at the start of the year, 31962. 31962. And I can help you by showing. You can see PPE at start of year. Done. Now we can have carrying amount of PPE sold. You know that an asset was sold during the period, and this will reduce the value of your property, plant and equipment. So, carrying amount of PPE sold. This will reduce your PPE, so you do a negative 543,000. The next one we have is depreciation charge. If you depreciate your assets during the period, this is going to be reducing your asset value. Now going back to the original bit here, I can remember that the note said that the total depreciation charge for the period is 4,992,000. So in my workings, I'm going to be reducing the value of my assets. 4,992. We've got depreciation charge minus 4,992. Always use negatives to show that the value of the asset is going to be reduced. Anything else has an impact on PPE? We've got PPE at the end of the year, and we're going to be doing that final line. The profit on disposal of PPE, this is not going to be shown because the profit on disposal, that's going to be relating to the calculation of the sales proceeds. The final bit, revaluation, this will tell us if an asset has gained in value or lost in value. Now, revaluations is going to be put into the revaluation surplus account. Or you can look at the information given to you in the scenario. There we go. Land was revalued upwards by 7 million. If you revalue your land upwards, this is going to have an increase in its value. So we're going to be adding 7 million in our workings here. Revaluation. That will be a positive 7,000. And the final line here is going to be the PPE at the end of the year. We take away the property, plant and equipment at the year end, and the net figure is going to give us the amount of cash that we spend on property, plant and equipment. So if I do PPE at the end of the year, I remember this from the previous page to have a value of 77,736. Okay. Here we've got PPE at end of the year. And we do a takeaway, ladies and gentlemen, because the net figure is going to be the amount we spent. So 77,736. Okay. Now, if you carefully add down this column here, that will give you your total PPE additions. So 31,962 minus 543 minus 4,992 plus 7,000 minus 77,736. The net figure I'm getting is minus 44,309. So the amount of money that Chicago paid for non-current assets during the period is 44,309, and this is going to be a cash outflow. So on the statement of cash flow, I'm going to write purchase of PPE minus 44,309. And then I'm going to get net cash from investing activities. That will be 682, take away 44,309. That will give me an answer to be minus 43,627. Minus 43,627. And that is the cash from investing activities. Now we move on to the cash from financing activities. For financing activities, this will relate to any bank loans, any dividends paid, and the proceeds of share issue. So let's start off with bank loans. Financing your company is all about raising cash to invest in the future. And you can finance yourself by borrowing money or selling shares. And if you do sell shares, you may pay your shareholders a dividend. So to get the bank loan, you will compare the opening bank loan balance to the closing bank loan balance. And you will identify this by looking at the statement of financial position. So at the start of the period, you owe money of 18,000. At the end of the period, you owe money of 40,000. Your bank loan balance has increased. How much has it increased by? 40 take away 18, that's going to be 22,000. So your bank loan has increased by 22,000. Why would your liability go up? The only reason why your liability would go up is if you borrowed more money. And if you borrow more money, that's going to be treated as a cash inflow. So on the statement of cash flow, I have a bank loan of a positive 22,000. That is money coming in towards us. The next item would be dividends paid. And we're very lucky, the dividends paid was mentioned to us in the very first set of notes. It says, dividends paid 4 million during the year. This 4 million was paid, so it's going to be resulting in an outflow of cash. So in the cash flow statement then, I have dividends paid, a negative 4,000. Okay, we have a negative 4,000. And the final line in the financing activities will be the proceeds of share issue. To identify how much money you've raised from selling shares, you need to look at the opening share capital and share premium balances and compare it to the closing share capital and share premium balances. The difference between the two will allow you to identify what was the money raised from issuing shares. If I scroll up to the statement of financial position, there we go. Your opening share capital is 20,000. Your closing share capital is 30,000. So your share capital has gone up. The share capital has gone up by $10,000. Now let's do the same for share premium. Your opening share premium is 6270. Your closing share premium is 9340. The difference between the two has given me a positive increase. An increase of 3070. So share capital and share premium have both gone up. So the total increase of 13,070 is going to be considered as a cash inflow from issuing shares. You should know from your studies that a bonus issue is giving shares away for free. There is no cash raised here, so you should not be confused with a bonus issue. Only selling shares at market value and giving away shares under a rights issue will be where you're raising cash. So that will be an inflow of 13,070. If I type that in here, 13,070. And now we're going to be adding down to get the net cash from financing activities. Make sure you put in the numbers very carefully in your calculator. 22,000 minus 4,000 plus 13,070. This gives me 31,070. And that is the net cash used in financing activities. Now we need to fill in these final three lines. The movement in cash and cash equivalents, the cash and cash equivalents at the start of the year, and the cash and cash equivalents at the end of the year. We need to ensure that the cash flow statement is reconciling. Now to get the net movement here, what you will do is take the cash flows from operating activities, add on the cash flows from investing activities, and the cash flows from financing activities. This will give you the net movement of cash. So do 12,040 minus 43,627 plus 31,070. This gives me a net movement of negative 517. So the operating, investing and financing net cashes are added up, and that will give you your net increase or decrease in cash. Now, to identify the cash equivalent at the beginning of the year and the cash equivalent at the start of the year, end of the year, you're going to be looking at the balances shown on the statement of financial position. So on the previous page, we have your cash and cash equivalents at the start of the period to be 372. Now we see if there are any overdraft balances. There are $0 of overdraft. If there was an overdraft balance, we would net off any positive figures to any negative figures. For the cash and cash equivalents at the end of the year, we have a 0 positive bank balance, but we do have an overdraft balance of 145. So we will need to enter these in the relevant boxes. On the next page, we have, there we go, cash and cash equivalents at the start of the year, that will be 372. But the cash and cash equivalents at the end of the year, that is a negative 145. Now we need to check if the cash reconciliation is successful. How do you get from 372 and end up with 145? To get from a positive 372 and end up with a negative 145, that means it will be an overall outflow. An outflow of how much, ladies and gentlemen? An outflow of 517. So you can see, ladies and gentlemen, that the difference between the opening cash and cash equivalents and the closing cash and cash equivalents is going to be the sum of the three activities added together. And that's how you prepare the statement of cash flow. This question is for a full 19 marks. And you can see, to be successful, we need to ensure that we are using the tables. The students are strongly advised to use the tables to complete them, as some correct workings will gain partial marks even if the final figure on the cash flow statement is incorrect. Make sure you're identifying the use of the positive numbers and the negative numbers. A positive number generally relates to an inflow of cash, whereas a negative number is going to be dealing with a cash outflow. The workings for interest paid and tax paid is extremely important. We attempted the calculation of tax paid in the previous session, so why not go back and watch that video and remind yourself of the important working. Always make sure you understand the calculation of property, plant and equipment, where it's money spent to buy new PPE or the sales proceeds from the sale of PPE. The workings here and the drop-down list will provide you with immense clues on the build-up of these calculations. And it's your task to show the examiner that you're able to do such questions in the real thing. Why not go onto the AAT website and have a go at their sample assessments? They're designed to mimic the real thing. And if you can do these questions now, imagine what you can do on the day of the exam. Here at LSBF TV, the tutors work very closely with the students, marking their work and providing them with constructive criticism. It's all about trying to identify where your strengths and your weaknesses are. If you have a relationship with your tutor, they can make you understand that you need to concentrate on this bit, or this working isn't great, or please refer to chapter number X, and then you can understand the calculation for property, plant and equipment. Our job is to give students the confidence that they need, and in order for them to be successful, we will push them, giving them the instructions and the guidance that they require. The examiner's report did generally say that the questions were answered pretty well, but only a small number of students exceeded their expectations here. Remember that the cash flow statement is made of 3 activities. the operating activities, the investing activities, and the financing activities. The next time we see each other, we're going to be looking at Chicago again, but this time building up the statement of changes in equity. Why not review the format of the SOSI and understand how the equity balances play a part in the statement of financial position? You should be learning the format of share capital, share premium, revaluation surplus, and retained earnings. Thank you very much for joining me. I'll see you next time, and I wish you a wonderful weekend. Goodbye and take care.